Hello, everyone. Welcome to Peer Prem webinar. Hi, Bernardus. Hello, everyone. So as you can see on the screen here, this will be the topic that we're going to discuss today, right? I will pull up the crucial global economic data for this week, which including the US CPI. So you have been long enough in this market, right? You might experience already what happens before and after the US CPI reading release. Okay, and I will start with this economic data, and then later on we'll discuss some of the economic data that is due later this week. Hopefully you guys can gain something at the end of this webinar, and hopefully it will help you in your day-to-day trading, right? Of course, ultimately, I hope everyone can make profit after this webinar, right? We'll just wait a couple more minutes. So if you have any questions, you can type it up, and let's see if I can answer your question. Maybe I can give a check with all of you here. You can raise your hand if you are a crypto enthusiast. Anyone love to trade crypto and actually make some profit out of this week? You know, the trend is superb this week. I would say it's like a bit waste of time if you look at the forex pairing and also gold. Okay, like in the past, gold usually will be the number one favorite for all of us, but we can't deny that for at least the past week or the past 2 weeks, the crypto market has been superb. No one here loves to trade crypto. Maybe one day I should prepare another webinar to talk about cryptos. And then yeah, I mean this is one opportunities, right? When there's an opportunity in the market, why not we just capture it? Okay, so well, without further ado, I think let's start. Right, so before I start, let me read out the risk disclaimer for today's event. This webinar is for informational and educational purposes only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instruments. Trading CFDs and other leverage products carries a high levels of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposits, so it is important to fully understand the risks involved before engaging in trading. While we will discuss market analysis and trading strategies, these are purely for educational purposes and do not guarantee success. By participating in this webinar, you acknowledge that Pure Prime and I are not responsible for any trading decisions you make or any losses incurred as a result. All right, so let's start. Yep, as you can see here on the screen, so what I want to do today is I will discuss what some of the important economic data or events that is going to due this week, including the US CPI, which already released yesterday. And if you happened to trade yesterday, you can tell that there's some movement along the way when the CPI was released. Right, so I will try to tell you what we should actually do, what should we actually think, prepare before the data release, and what should we do on the spot and also after the data release. Okay, so this is the rationale for today's topic, and these are the content that I will cover today. Like I said, we'll talk about CPI, and then later on, the Australian job data, and as well as the UK GDP that is going to due tomorrow. Okay, so I don't know, because I think you guys come from everywhere in the world. So the Australian job data actually will due in maybe 12 hours from now. But the UK GDP will come later. So you have to have a quick, digestions for today contents. Okay, that something that I discussed with you guys, and if you think that is helpful for you, that it's a blast for me. All right, and also lastly, the Japan GDPs, and also very importantly, because this will somehow have an impact on BOJ to make their decisions for the upcoming monetary policies move. Okay, so these are the things that I will try to cover for today, right? Well, so before we actually dive into all this economic data, maybe I should discuss like why economic data is important. You might tell me that, oh, I'm just a technical analysis believer. That is fine, because everyone here we will just use technical analysis when we try to find out where is the best possible entry point and where is the best possible exit. Okay, and I hope that everyone here will do your risk management very well. So by how we do risk management is by using the technical analysis, right? We draw our support and resistance line. Okay, so undeniably, technical analysis is very useful for all the forex trader here. Okay, but economic data or the fundamental analysis actually also have to be the priority, right? Because if you are so superb in doing technical analysis, but for example, let's say later, President Trump suddenly say, yeah, we will go all out to have a war with Russia, for example, then you can think what's going to happen, right? The oil will just like skyrocket, gold skyrocket, thing like that, and then Wall Street crash, right? That is going to defies all of your technical analysis. You got all wrong. Okay, but of course, in the peacetime, in the normal day, we will try to use the technical analysis actually to try it out, to find out which direction is the majority, and then we try to write on the trends, and hopefully we can capture the trend and then profit from it as a result. Right. So yeah, the critical economic data like NFP, like CPI, are actually the main drivers for one currency volatilities, especially those data that are related to the US economic performance, right? Because from there we can actually will know the health of one's country's economic status or performance. And also by looking at the economic data, it will actually affect when the central bank make a decisions in terms of monetary policy. Okay, and we know the value of a money, the value of a currency is actually derived from the interest rate level. Okay, this is what we say, the price of a money is actually the interest rate. So the central bank is the ones that's going to tune the interest rate. So they are the one to decide the value of the currency, right? So how they decide, how can we get a clue before they announce the decisions, is by referring to all this important economic data. Of course, everyone know about non-farm payroll, right? That will be the number one economic data if we talk about US dollars, when we talk about trading on gold and whatnot, right? Because US dollars is the currency that is used to denote a lot of asset classes, okay, like silver, gold, oil, all of it. They uses the US dollar to price themselves. Okay, right. So the economic data changed the perspective of the central bank's monetary policy. Right. So this I already covered. So that is why that is very, very important. Again, you might say that I only use the technical analysis, but when the economic data come out that surprised everyone. Okay, like what happened, if you guys can remember, can recall what happened last Friday when the non-farm payroll came up. Okay, that was like came like way off from the market expectations. And then what is what is even more interesting is that president come up and condemn the chairman of the Bureau of Labor and Statistics, say that she tried to manipulate the data, which led to a crash for the US dollar, right? You guys remember? Have you guys trade on last Friday? Right, that is, no matter like how good you are in drawing chart, no matter how good you are in drawing support and resistance, you can't beat event like this. Okay, so how to trade with economic data? So this is something that I come up with and which is I practice by myself every day when if I want to trade on the news, trade on economic data, this is something that I will do. Okay, I'm just sharing with you. If you think it is useful, you can go ahead and do the same practice as I. Okay, right. So first thing first, you have to understand what does the economic data means to a currency. Okay, you don't be like, like funny enough to look at the UK GDP and then when you are trading like EUR USD pairing, like for example, or trading like AUD NZD, for example, by looking at the Eurozone unemployment rate, right? That is not going to work like that. Okay, so you have to at least know the rank of, I mean the priority, the impact of each economic data, and then applicable to which respective currency, okay, before the economic data release. Okay, for example, right, a lot of countries, when they talk about inflation, they talk about the CPI, right, the consumer price index. But that is slightly different in the case of the United States. Why? It's because central banks, right? It's because about Federal Reserve, but they preferably referring the PCE reading for their inflation gauge rather than the CPI. Okay, so that is like slightly different from other central banks like the ECB, like the BOE, like the RBA. They just refer to the CPI. Okay, so when you talk about US dollar, when you talk about inflations, they prefer to look at the PCE rather than the CPI. Right, so you have to rank them, and of course, like I said just now, when we talk about non-farm payroll, that is definitely the number one economic data that we are talking about here. Okay. Okay, now next, some of the economic data, they still have some impact, but not that much. For example, like the PMI data, okay, and also something like the retail sales data. It has a minor impact, but it's not impactful enough to pivot the previous bigger trend. Okay, if you look at 50-minute chart, if you look at 30-minute chart, of course you can see the fluctuations, the volatility after the data release. But if you look at H4, if you look at daily time frame, then you can't actually find a big difference before and after the data release. Okay, right. Come to the next one. Find out the trend before the currency of the currency before the data release. Right. So what I mean here is that if you look at the chart itself, okay, like for example, tomorrow I'm going to trade with the Australian job data. Okay, tomorrow I'm expecting for the Australia unemployment rate and also the employment change. Okay, but before that, when I look at the chart, for example, AUD USD, I'm talking about a higher high and a higher low price pattern, right? Which is an uptrend. Okay, so that is very important. Okay, we have to at least find out what kind of trend of this AUD USD pairs is trading. Okay, before we are talking about the job data. All right. Okay, next later, third one, I have to think of it myself of the best case scenario and the worst case scenario. Here come for two parts. First part is what should I do when the data come in favor the currency? and what should I do if the data come not friendly with the currency. Okay, when everyone know the unemployment, the lower the better, right? The lower it means that the job market is at full capacities. Everyone got their job. Everyone is spending. The Australian dollars will be more expensive. Okay, in this rational. Okay, and if the unemployment rate come higher than the market expectations, okay, higher than what the economists think it should be, that will be that will have a negative impact on the Australian dollar, right? So then I should know like what to react after this. So I have to think of it by myself. And the second part of this best and worst scenario is that about risk management. Okay, I should know where to cut my positions if I got it wrong. I might know that it is like a higher high, higher low uptrends, and then I might think that, oh wow, the unemployment rate come low, the trend should continue. But I don't know, like if the market perceive it wrongly, if later on the RBA come up to say something very different, okay, give a very dovish message, then I will got it wrong, and then anyway I have to admit my mistake, and I have to cut loss. I have to close my positions. Okay, this is something that I have to think ahead before I trade on this economic data. All right, and lastly, define your trading strategies. Okay, this by saying this, I mean that if this when you open these positions, okay, when you hold these positions, you are using a swing trade strategy. You want to hold for the entire trend, for weeks long, for 2 weeks, 3 weeks, or you are just a scalper. Okay, like for example, a lot of people when they talk about NFP trading, they will just hold the positions for like 5 minutes, 10 minutes, 15 minutes, and then they will close. Okay, that will be, have a big difference when you look at the economic data. Because, for example, if you use a swing trade strategy, it doesn't affect a lot because you already want to hold the trend for long enough, and then when this economic data come up, unless it has like a structural break, it is like strong enough to break all your previous trajectory, then of course it meant a lot to you. But if it's just like a minor spike or minor plunge, then you can just go ahead, or if you want to top up, that is fine for you. So this is very important. All right, so in the case of the US CPI reading, okay, for example, I'll share with you what I think before and after the US CPI reading with this like already came out to the markets, right? So on Tuesday, the CPI reading actually came softer than the market expectations. Okay, and before that, Jerome Powell, the Federal Reserve chair, there he has been stressed that they are anticipating a rebound of the inflationary pressure. Okay, because since April, President Trump he imposed the tariff with all these trading partners, right? So the price will ultimately falls to all the consumers. They have to pay more expensive price when they want to buy foreigner goods, and at the end of the day, it will reflect on the inflation data. So this is something the market is anticipating. Okay, at least John Powell anticipated. But yeah, the reading on Tuesday came softer than the market expectations, right? And you guys already know the result. Okay, the US dollar actually plunged and extends the bearish trend. Okay, so ahead of the CPI reading, we already know the dollar was soft. Okay, it like headed that way. Remember, I talked about last Friday. Last Friday, when the non-farm payroll came out, didn't meet the market expectations, and later on, President Trump dismissed the chairperson of the Bureau of Labor and Statistics. So the market lost confidence towards the US dollars, and it started the downtrend. Okay, so it's already with trading within this downtrend. Okay, so and later on when the CPI reading came out, and then the market perceived it as a supporting evidence for the markets to believe the Feds will have a rate cut in September. Remember, like early on, the Fed has already cut the rate. I cannot remember 2 or 3 times, but then it has been halted for a very, very long periods. But now, after all this tariff drama, this episode has already ended, and now markets start to think maybe Jerome Powell and his colleague will vote for a rate cut in September. So I already talked about the interest rate and the value of the currency, right? So when there is a rate cut, it is like cutting the value of a currency. Definitely, it means that the depreciation for a dollar, right? So this, strengthens the market belief for a September rate cut after the CPI came at 2.7%. Okay, that is the rationale, right? And yeah, the Fed refers to the inflation data to make the monetary policy decisions. So, this is the relationship that we should know. Okay, so yeah, when we look at the chart here, this is the US dollar index, right? So this is why I say started with Friday markets, which is already broken the uptrend, right? So you can hope that everyone can see this particular candlestick has already broken the previous uptrend structure. Okay, and what happened next is like it is easily to pull a Fibonacci retracement from the bottom to the top, and you already can tell before the CPI was released, the US dollars index has been like hovering at the Fibonacci retracements of the 61.8%. This means that it's like in a decisions making levels whether or not from now onward the US dollars is heading to a downtrend rather than the bullish trend reversal. Okay, so a more details TA is that it has been like consolidate over here and then later on have a false pull up breakout, and this was happened when the CPI was released. And what is more useful movement is that later on broken below from this price consolidation range. So from here, we already can tell ultimately now the dollars is very, very weak. Okay, so especially after the CPI was released. So from now onward, if you're talking about GBP USD, EUR USD, you can trade against the US dollar because after this we already know the US dollars is weaker than before, at least weaker than last week. Okay, and if you talk about AUD USD, NZD USD, the trend is not as defined as GBP USD and EUR USD because pound sterling and also the euro is slightly stronger than Australian dollar and New Zealand dollar. Okay, that kind of relationship. So at least after the CPI reading, this is something that you have to at least guess it. I'm using H4. Okay, don't blame me why I'm using H4 because I hope that this the trend will be easier for you guys to get and it will not expire too soon. I don't want it will be like a fool if I discuss the market with you by using a 15-minute chart. At the end of the webinars, the trend has already gone. Okay, so that is why I'm using a H4. All right. So after we talk about CPI, then let's move on to something that is going to happen next. Okay, which is the Australian unemployment rate. Of course, this is not like the most famous or the most traded currency in the market. Okay, but this is something that I use it as an example. So hopefully in the future you guys can know like how to make an analysis before the economic data release. Okay, now at the moment the Australian dollars is kind of strong. Okay, it's like gaining in the strength against its peers, against the the New Zealand dollars and whatnot. Okay, but it's not like very, very strong if you compare to euro or the GBP. Okay, so and also but yesterday the RBA cuts the rate by 25 basis point, which is already priced in by the market. Everyone already expecting it, and it does happen. So but what is more crucial is that the markets actually focus more on the RBA monetary reports. Okay, what the RBA officials say when in a meeting when they make a decisions for these rate cuts is that they say they will be like 100% depends on the data, especially the job markets. If the job markets remain robust, okay, remain resilient, remain tight, then they will hold the interest rate levels. But if they show signs of easing, continue to ease, more and more people losing their job, unemployment rise, climbing, then they were going to cut the rate again. So again, if we're talking about interest rate level, we are talking about the price, the value of one currency. Okay, so I already come up with this table, okay, to show the relationship between the unemployment rate and the strength of the Aussie dollar. Okay, so tomorrow during the Sydney sessions, if you see the unemployment rate is higher than the market expectation, then you can expect the Australian dollars to depreciate against the peers, against like GBP and EUR, for example. Okay, and if vice versa, if the unemployment rate is lower than the market expectation, it means that the job market still very robust. Okay, what's the RBS going to do? It's going to hold the rate unchanged. If the central bank doing so, it will lead the Australian dollars to appreciate, to go stronger than against its peers. Okay, so this is the rationales when we before we look or we trade on this Australian unemployment rate. At least we have to come up with something like this. Remember, I told you guys we have to come up with the best case scenario and also the worst case scenario. So this is something that I do. So how can we, at least do more analysis on like what to expect? Okay, by looking at the previous data. Okay, by looking at the track records. So you can see here on the chart here, the unemployment rate, the trend is, has a tendency to go higher and higher. Okay, and if you look at the employment change, of course, this is not really usable because the data actually come, in a very fluctuated manner, up and down. But the past two reading has been extremely low, about negative. So for me, I will, at least lean towards a higher than expected unemployment rate, or it will come in line with the market expectations. But this will also lead to a slight, just hammer down the Australian dollar slightly. So if, the unemployment rate come higher or in line. So this is something that I will try to think if I really want to trade on the unemployment rate. Okay, so if we look at the AUD USD, let's see if we can have a very conspicuous trend that we can really spot on and then try to trade on the unemployment rate. Okay, so first of all, the AUD USD, you can see it's like about to break the previous downtrend patterns, right? Okay, it's like already breaking this Fibonacci 61.8%. So I will try to lean towards a bullish AUD USD pair than the bearish. Okay, so if later if the unemployment rate really like come lower than the market expectation, I will really definitely go to watch out on the AUD USD, try to capture the trend. Okay, for example, what if GBP AUD, right? So it is climbing, right? So it means that the Australian dollars is weaker, right, against the GBP. They already say, I know that the Australian is strong enough, but not strong enough against the GBP or EUR. So if the unemployment rate come stronger than the market expectations, this will be the forex pairing that we're looking into, because I already know this is already trading in an uptrend. It's mean that the pound sterling is stronger than the Australian dollar. Okay, so this will be the thing that I always put in mind if I want to trade on the economic data. Right? So let's move on to the next one. Okay, the next one is the UK GDP. Okay, from here, this example, right? If you want to rank the priority, the impactful of one economic data, usually GDP will not be as impactful as unemployment rate or the interest rate decisions okay, or something like that. Okay, GDP will not be that impactful. Okay, so the rationales for the UK economic data is that I already said the pound sterling has been quite strong. Okay, and as well as the BOE has already cut its rate. Okay, early on, but it actually didn't affect the pound sterling. So from the side, we can also tell that at the moment, the pound sterling actually ranked in a top tier against all the major pairing. Okay, the G7's currencies. Okay, so yeah, if the GDP come very strong, okay, it's going to defy the quicker BOE rate cut expectations. What does it mean here is that at the moment now in the markets, people are expecting the Bank of England to cut the rate now because previously that is like have interventions from the Trump Liberation Day sweeping tariff policies. But now, UK and US, they already reached a deal. In fact, UK secured one of the lowest tariff level against all the US trading partners. Okay, if I'm not mistaken, it was just 10%, like the lowest. So it's actually helping the the UK economic growth, right? And also, if later on tomorrow in the market, if you look at the UK GDP, if it come in favor to the pound sterling, then you should know what to do, right? Okay, same. I will try to pull up some related data before the UK GDP was released. Okay, first of all, the CPI, okay, this is the latest CPI, actually comes stronger than the market expectations. Okay, so what drives the stronger or a higher CPI is that the people are spending money. People are spending money when the demand is there. That is the driver of a higher CPI. Okay, but if you look at the retail sales reading, okay, the closest one is weaker than the market expectation. Okay, so this is a very contradict economic data for the UK. Okay, and later on the third one, the unemployment rate that was released last week actually just maintained at 4.7. Of course, if you talk about 4.7%, is actually the highest levels already in 2025. Okay, it has been climbing since first quarter of 2025. So, but the market is expecting, no, I mean the previous unemployment rate when it disclosed is already come at the same level as the previous reading. So this, when we refer to these three economic data of the United Kingdom, it actually gives us no clue about the UK GDP. Okay, so but if you look at the chart here, that is showing slight improvement for the GDP growth. Okay, so I will also tend to believe that for tomorrow the UK GDP will come at least close to the previous reading. So this is the only analysis I can do before the release, before the GDP was released. Okay, so with this rationale, with this thinking, I will lean toward to a hold or a open a long positions that in favor to the GBP. Okay, so for example, if I'm talking about EUR GBP, then I will short it, and if I talk about GBP USD, I will long it. And in fact, if you look at the GBP USD pairing, hold on. Right. It's actually trading in a very nice, very obvious, conspicuous bullish manner. Okay. It started where it's actually started over here when we know that the GBP USD pairing has already stood firm on above this 61.8 Fibonacci retracement levels. Okay, stood from here and jump up higher, and it's like now go back to the previous high level. Okay, so be my guest if tomorrow the UK unemployment rate came lower than no, sorry, my mistake. If the tomorrow the UK GDP comes stronger, okay, the reading come higher than the previous reading, it will actually at least leads the GBP USD pair to break the previous high over here, which is, can go higher than 1.358. So this is the thing that I'm expecting. Okay, you don't need to follow me word by word, but this is what I'm going to do tomorrow. All right. Yeah. So this is what I think, what I do before the UK GDP was released. Now, the last one, the Japanese GDP. Okay, this one, the Japan's GDPs will due on Friday. So, okay, you don't miss out. You keep waiting for tomorrow, but actually it's going to come out in the Tokyo sessions on Friday. Okay, and now is a very interesting time. We are at the junctions for BOJ to make a change in the upcoming monetary policy. Okay, so the GDP is not really will be the very critical economic data for the BOJ to make their monetary policy decisions. Okay, so it's not as strong as the inflation rate, it's not as strong as the wage growth. Okay, it's just like a mediocre. But anyway, it is already going to due soon, and then we got nothing else to look into. But why not? We can trade on the Japan GDP. Okay, so the rationale is the same. Now, if you can remember, if you have been in the market since 2024, we actually witnessed a very special moments for BOJ where it actually ended the decades-long ultra loose monetary policy. Okay, it means that Japan actually pivot from a very, very dovish monetary policy from negative interest rate level to positive, and now stood at 0.5%. And the last rate hike was like, half a year ago. So it has been halted for long enough. And it's a similar drama with the UK. Japan has struck a deal with the US, and then they agreed on certain levels of interest tariff, and also agreed to invest billions of dollars on the US soil, so that President Trump happy, and it actually eases the concerns of the Japan domestic economic growth, because when we talk about Japan economy, they are a very export driven country. They rely heavily on export, and one of their biggest trading partner is actually the United States. So when they secured this trade deal with US, it actually eases all the worry, all the concerns regarding the Japan economic as well as the yen. Okay, so similar, if the because at this moment, okay, everyone is already predicting or speculating that the BOJ will continues, okay, resumes its rate hike soon, because we have already dissolved the trade war risk between US and Japan. And in fact, the Japan inflation that was like, always at negative levels in the past decades has already now steady on above 2%, which is the targeted inflation rate for a lot of country. And what is more importantly is that the wage growth is already improved. Okay, leads by Toyota and Uniqlo. They agree to increase their wage to their employee. Okay, which is like the biggest driver for the local companies. Okay, so we have already have the sufficient factor that leads to a rate hike from BOJ, which leads to appreciations for the Japanese yen. But if you now, when you trade in the market, when you look at the Japanese yen, it's actually still in a bearish trend, bearish manner. But for me, I think it's about to witness a pivotal a point. Okay, I think very soon you can see when you trade on a USD JPY, when you trade on the GBP JPY, you're going to witness a trend reversal soon. Okay, because the next, I think by the next BOJ rate decisions when it's nearing, I think a lot of economists will come out to say they are expecting Kazuo Ueda, the chairperson, to decide for a continuation and resumptions of our rate hike, and it will drive the Japanese yen higher. Okay, so now, of course, if I say that the Japanese yen is going to strengthen soon, but if you look at the trend now, it is still on the downside. Okay, especially when you talk about the GBP JPY and you talk about EUR JPY. Okay, it's a very, very obvious trend. Okay, so tomorrow, I mean on Friday, if the Japan GDP came softer, much softer than the market expected, then people will think that, oh, the BOJ might have to wait for longer to have the next rate hike. Then EUR JPY, GBP JPY will continue to trade in the uptrend. Okay, we are trading on a softer Japanese yen. But if there is like a very strong GDPs coming out on Friday, then you can expect a trend reversal. Okay, a downtrend reversal for EUR, JPY, as well as the GBP JPY. But of course, you can at the same time bully on the softer US dollar. Okay, you can look at the USD JPY. If the GDP come much higher than the market expectation, okay, this is something that you want to do. Why? Because I already drew it. The USD JPY has already broken the uptrend structure. It means that it leans towards a bearish bias. Okay, so if the GDP come very strong, I will look at the USD JPY, and I will expect it to at least break below from this support level here, and it will be the beginning point for a downtrend USD JPY. So this is something that I would do when I talk about trading on the Japan GDP. Right. So lastly, so this is my final words for you guys. You have to at least understand all the the impact rating for each of the economic data. I cannot discuss one by one here with you, okay? But I can tell you like the unemployment rate, non-farm payroll, inflation data will be the number one economic data that every traders will look into. And when you talk about GDP, retail sales, not that much, okay? Right, and then you have to compare the actual and versus the forecast. So this is the only thing that we can, compare it, and then we have to also think what's the major markets going to interpret the economic data, okay? Because you think it by yourself, it's not going to have any changes. You have to think what the major market, especially the institutional player in the markets, what they think regarding the economic data, and then we try to follow them and we try to capture the trend. Okay, last but not least, very, very important, I have to stress this almost every time in my webinar, is that you have to do your risk management very well. Even me, I don't like maybe Warren Buffett or anyone's Peter Lynch, they cannot get, they can't be right all the time. People make mistakes. We are not robots. Even if you go for the EA, you go for a robot, they will still make mistakes. They will still lead you to losses. Okay, so very important, save your trading capital, do your stop loss and TP well. This is what we call risk management. Draw your support and resistance line. Okay, of course, all these support and resistance line, you're not going to get it correct 100%, but at least save your trading capital and become stronger next time. Okay, we can't be right all the time. All right, here come to the end of our today's sessions. I'll open up for Q&A sessions. If you have any questions for me, you can type it up, see if I can answer your question. Right. So Nina actually asked, why did Australian dollar get stronger after interest rate cut? If it's USD, it will mean weaker USD. Right. This is actually very important and interesting questions, right? We can't be right all the time. Okay. If you ask me, I did the same mistake, I did the same thinking as well with you. When I see the RBA rate cuts, then I will think at least it will have like a minimum impact on the Australian dollars because it has already priced in by the markets. But when the RBA cuts the rates, it actually leads to a stronger Australian dollar. And later on, when you look at, when you read the news, oh, then the people, the strategists, the economists, or the institutional player actually says that it was because when the RBA, willing to cut the rate to save the economy, it's actually, bring confidence to the people against the Australian dollar. It is like favoring the Australian dollars to be stronger because the RBA do something to safeguard its economy. Okay, this is the thing that, of course, I don't buy this rationale, I don't buy this thinking, but it just happened this way. So, I can't fight the markets. That is why, again, we have to do our risk management very, very well every time when we open each position. Right, Didik, some Seriyato asks, will gold make new all-time high this month? I doubt that. Okay, why? Because if you read the news in the market, you can actually see we got a very important event this coming Friday, which Donald Trump and Putin's they are going to meet in Alaska, okay, on Friday to talk about a potential truce between Ukraine and Russia. And the war has lasted for at least 3 years already. And if you look at the gold trend, okay, if you zoom out long enough, you can see the trend is actually hard to get. It has been like trading in a wide range of a sideways range bound patterns since May. Up and down, that is like not what we learn from our textbook. But I will try to think if you zoom out, way out enough, you can see gold is actually broken below from this uptrend support line. Okay, and this is something that I drew. And if you look close enough, okay, so this is something at 3380 around here will be a very critical level that I'm going to see at the short period of time. Okay, if the gold is able to break above 3381 somewhere around here, then I would think will be like a short-term structural break. But now at the moment, I still believe gold is actually trading in a downtrend. Okay, why is it very easy for you to spot something like this, right? Downtrend, sideways, false breakout, and I'm expecting this kind of patterns to come up next. I'm not guaranteed that I'm going to be right all the time 100%, but this is actually the trends that I can think of before, the upcoming trend. Okay, I'm not going to be 100% right. Okay, so hopefully I answer your question for Didik. My conclusion is I don't expect the gold to make new all-time high this month, but maybe BTC or Ethereum will. Any more questions, guys? Right, so if no further questions, then I guess this will come to the end for today's sessions. So yep, I bless you guys. Hopefully this is the information that's going to help you in your upcoming trading. Okay, so finger crossed we got it right, at least for these 3 upcoming data. Okay, so we will still have sessions next week, same day, same time. Hopefully it's going to see you guys again here. Okay, once again, thanks for your support, and hopefully you can have a very enjoyable time trading with PewPrem. Thank you everyone. Bye bye.